And it looks like it's quarter to 9 a.m. In today's episode, we will focus mainly on major indexes, as many of them looks to be at their turning points. So it's very important to catch that moment, catch that point where that may happen to make the chances, the odds to win on this market much bigger. So without any further ado, let's get into our next episode. And we are jumping to economy view. Let me get this uh, clear. Right now, we are jumping through economy view. Right over, we will get to market outlook and uh, many charts to study today. So at first, let's jump to first slide of economy view, and that's Katie Wood stands where she finds that bond market is about to show a serious mistake. So right now we will jump to what um, what she said on Bloomberg. So we can find it on Bloomberg. So it was on Twitter, but Bloomberg has dragged it out. So bond market, due to her point of view, is right now at the very extreme, and every single time where this element happened, and we had such inverted yield curve that always symbolized recession throughout recent 30 years. So three recent crises were literally I will maybe show this up. Let me know whether I have it or not. So yes, curve warning is that inversion proceeded in the last three US recessions, and that's exactly the point where we are currently at. So that's exactly what we would need to know, is that this curve hasn't been that steep even during 2001 recession. So we were back then during the point where the slide was obvious, was very abrupt, but this time looks like during recent times we had it even more severe. So for me, that taking us back to history, this recession that we may go ahead through 2023 2024 might be even bigger and even stronger than the previous. So jumping back to the Mrs. Katie Wood stance, she finds that we are also going through possible deflation, where the appetite for many goods will be stable or will decrease, whereas we will have an oversupply on the market. One of the example is this S&P energy sector price that, due to her point, is not far is it's not fairly I would say fairly priced, as the XLE, the ETF, is at near all-time highs, whereas the oil price is just the around 0.5% of its peak. That's why the ETFs don't keep up with these elements, and we will have a possible price decrease yet on the market. So jumping to the next element, we'll have market outlook. And in terms of market outlook, I will jump at first to what we had back then during data of labor market. As we know, the Fed is looking at the labor market very carefully in order to hike interest rates pace. And we also finding out that there are many companies that right now trimming staff, and that's usually is preceding headwinds in the economy. Right now, this tech layoffs, you may also find the tech layoffs tracker. There is a list of layoffs right now, and that gives us kind of an insight. Yes, sorry, I have refreshed. Something is going on with my network. Okay, so if you want to know what's going on in a tech sector, those elements are attached right here in this table. That's very interesting to watch how the market behaves to the current economic circumstances. We have many companies among different industries, and industries are right here. If you wanna have an insight in the layoff charts right now during November, employees laid off has reached a total peak, whereas we didn't have it reverberated on slides of indexes. That's why that maybe still haven't priced in yet. You also have lists of employees laid off if you wanna check this out personally. Okay, let's jump to market outlook once again. All right, so I wanted to, it looks like there weren't more slides, so I wanted to show you out the charts. So let me find out once again. Okay, so going to charts, we are looking at this point at the most important charts right here, and that is DXY. That's what the whole world is watching at. So DXY right now is somewhere at the decisive point of whether we go up or down. We are forming kind of a inverted then the standard head and shoulders pattern in this local territory, where I do find this one to accelerate to the upside from here. As on a RSI chart, we are forming somewhat called accumulation before a next coming polarized moment. So in terms of DXY, that's what exactly what I right now expect. In terms of US 100, US 100 is right now rebounding out of this recent support, and right now is getting to test out those recent support that right now is becoming a resistance. We have broken out of this downward line and right now heading towards 730 relentlessly. Okay, so that was the market outlook. Right now, let's jump to another element that's a crypto outlook. Okay. So we got a crypto outlook right here, and in today's episode, I will put an emphasis on what regulators are going to do with the industry. So we had recent perturbations that were posing new questions. Right now, I will jump to. Let me switch the windows once again. I will show you out what I got. Okay. So let's jump right back to what regulator stance is. So we don't want to make this industry getting down and moving towards a direction where those regulations will stave off new possibilities. We want the industry to flourish. In order to this, we do need an optimistic regulations that won't scare investors as well as typical customers. So as we find out right here, the market sector of cryptocurrencies surged during recent bull market to almost $3 trillion, and there was almost any wolf of Wall Street. So I mean, there weren't many institutions that were into this trend. There were just some of them that were catching those Bitcoin and Ethereum trends, whereas no one was really interested in decentralized finance. Decentralized finance that allows many to send those currencies in a trans-border way with cheap fees. So these are the potential elements that may become a kind of a pathway for next bull market for crypto. But without regulations, I find that won't literally happen. I don't find that very restrictive measurements of SEC will be very necessary, but we need at least some elements that may clarify the guidance in which many cryptocurrencies circulate and run the business with. So that was out of the cryptocurrency market. Right now, let's jump to market movers, and for this one, I have for you, of course, let me jump once again. Sorry for switching the windows. I had some issues with this one. Okay, at first let's jump to market calendar. What we are waiting for is definitely on Thursday. sorry, that's December 15. So on Thursday we have initial jobless claims already through, and that one is keeping up the level, so it's not very bad, but it looks like initial jobless claims has risen since October, as well as it was back during the time of April to July. And we are awaiting PPIs to turn up tomorrow. That will be the one of the preceding elements for CPIs to turn up, and consumer price index will get published on Tuesday. Inflation rate year-over-year will be right there. Let's have a look once again at what's the current structure of annual inflation rate, and this one has dropped to 7.7, so it's giving chances for Fed to make a little bit more dovish tone, but it's yet very important to watch ahead. Okay, so that was market calendar. Right now, let's jump to market mover to trade idea section from market movers, and right now let's jump to another element, that is this trading view trading view outlook. So in terms of DXY, I already told you. And in terms of EURUSD, I do find that this one, EURUSD, is right now somewhere at the brink of a turn, as we are approaching very important resistances. And the resistance that was set at 1.06. So I do expect this one to make a turn anytime soon, but we are right now climbing up, and due to its hawkish projections for December, that may last a bit longer. So ECB is about to deliver its quantitative tightening plan. That's why it pumps literally on the hopes that ECB will get finally more hawkish. But I do expect that those plans of being a hawk in terms of European Central Bank will backfire, and will have a sell-off on days. Okay, in terms of DHY, right now we are in also decisive point, as it's right with US 100. We have broke the market structure. Yeah, all right. So we have formed a lower high that gives us an invitation for bears. But for this one to happen, we do expect DHY to rebound to these levels of today's session, and that's the point where those bears should be sitting. So that's the one of the supply zone that will get respect in some terms during next 1 or 2 sessions. In terms of Germany 40, that's also one of the chart that also curving its recent trend, and may get somewhere right here where the German 40 may stop out. In terms of commodities, that's also in terms of WTI, that's where the supply zone should be found, is that somewhere right here, and right from there I do expect this WTA to continue march downwards, and it still have some chance to fall of around 17%. of this 7600s. So for me, we should get stopped out on WTI and its reversal somewhere around this level. If we make it out, I would expect this one to move downwards. Let me jump and clarify the possible path. So it may WTI may move like this with a stoppage right at the at this supply zone. So I do expect this 7800s to stop out WTI for good. Otherwise, I would expect WTI to form kind of a reversal pattern that won't leave any doubts that it will make a polarization and move downwards further. Right now we are quite low at the RSI chart, so shorting from here is still risky in my opinion. Okay, in terms of natural gas, that's the one of the last for today. Natural gas is rebounding out of this recent trading bout I've shown you. So if you listen to our episodes, you may find out that I've recommended to take some position right at this point, and we've slightly hit it right here. That was right around 5.3. And in terms of so on the natural gas, it may happen that we'll get this gap filled in the next 2 or 3 sessions if this price movement and momentum remain. In terms of gold, that's the one of the last elements to study in today's episode. For me, this supply zone is around here, 18.1 hundredths should stop gold from climbing forward, but we still need a clear pivot formation that won't leave any doubts for this. So if we break above that, another stop we'll get at 18.6, but it's still far from there. On silver to US dollar, I do expect the silver to get the point of this resistance. So silver still has some chance to go. This pivot may happen, as I have previously stanced. Pivot may happen right at the Fed's meeting on December. So for me, many of those charts looking at being at the turning points, but we're still awaiting CPIs to turn up, and PPI of tomorrow will be kind of a presage of what may come next. It's worth watching. If you haven't subscribed yet to the channel, I highly invite you to do this right now. If you have enjoyed, just hit the subscribe button, and if you have any questions, if you enjoyed, also click this thumbs up button, and if you are prone to do this, just come over and leave some comment below the video. Thank you very much for watching, and see you tomorrow at 9:45 AM East time.